Okay, hello, pre-tech traders, and to everyone that's listening to us from outside of the firm. I'm going to be going through the weekly trading roadmap for the week starting the 2nd of November 2015. So, just taking a look over, we've got a new month. Obviously, October was a pretty decent month in terms of volatility. Nothing crazy, but there was still, I think, some decent opportunity. Hopefully, November is just as decent. What I'm going to go through is just basically the event and risks that we see in the week ahead. We'll look at the weekly risk allocation of that. Obviously, this is my personal plan, so my personal risk allocation. Obviously, there could be things that you trade differently and better, so do change that accordingly. And then we're going to take a look over the Bund and the Eurostoxx 50 futures and see what they're structured at currently and how we could potentially see that moving forward and where we see the opportunities really for the week ahead. So, just to start off, first and foremost, on Monday, we're going to have basically, for all intents and purposes, Monday is the first of the month. And as we know, on the first of the month, usually, this is traditionally, doesn't always work, but on the first of the month, we get flows into the equities. So obviously, you would expect that if the market is relatively bullish and we're in a bullish uptrend, the trades get put on the first of the month. So you see that flow come into the market in the equities. So we're going to be looking at the FTSE. We're going to look at the DAX, the Eurostoxx 50, and the S&P 500 for any opportunities, particularly in the morning. In the morning, we get that flow come in between. The cash session, we like to see it in between 8 and 10 o'clock. So between 8 and 10 a.m. London time. So that's one thing to keep in mind for Monday. That's one of the major, I think, trades that it's going to give us good context with how the market structure as well, which we'll take a look at in a second. From an event and risk perspective, we've got the German, European, UK, and PMI manufacturing. Those are all final readings, so not as important as the preliminary. Well, they are very important, obviously, if we get something a big beat or miss, but the preliminary numbers is really where we get the volatility between what's consensus and what actually came out. So do bear that in mind. We've got the US ISM manufacturing, pretty much the biggest data point for Monday, so do keep in mind how that moves. I would say one key thing that I've seen over the years is that when the ISM manufacturing comes either big beat or big miss, I have it as a note never to fade it in the bonds. It's something that I've just learned from experience. Some figures you can fade. This is particularly not a figure you want to fade if it's a really big miss or not, or beat. We also have the ECB's Lautenschlager, Lind, and the Fed's William. Overall, I've put myself 15% risk allocation for that day. I could have put myself up to about 20. Traditionally, I've seen from my stats that on Monday I don't perform as well as the rest of the week, so I tend to give myself a little bit of a less of a cushion to trade with on Monday. And plus, from a psychological perspective, I find that if you give yourself, if you take a big hit on Monday, you're usually spending the rest of the week to make that up. It's good to keep yourself in a steady frame of mind, stable frame of mind for the rest of the week. Come Tuesday, we've got the UK construction PMI, the US factory orders, and the biggest thing for me is the ECB's Draghi. Now, where we've left off with the ECB is that, from the last meeting, they were extremely dovish. So dovish as to basically point to December for potential move. We don't know what that move is, though. Now, I think any sort of potential outliers, things that the market might not be expecting, is if Draghi potentially backtracks. So if he backtracks at all on what he said, for whatever reason, I wouldn't imagine that is very, very unlikely. He's pretty much always uber dovish. But if he backtracks in any way, shape, or form, basically saying, oh, maybe the market's kind of overpriced the depot rate cut or something along those lines, maybe we get a bit of an offer in the short end, which is probably going to provide us an opportunity in the longer end as well. What we could see, what's theoretically a bit more probable than him backtracking, is for him to actually give us a bit of a clue what he might do, what they might look to do. I mean, he has mentioned even more negative interest rates, but you know, there's been talk of potentially, they've been talking of potentially ECB buying equities. So, if they announce anything like that, which is absolutely insane, if they announce something like that, just do not hesitate. You execute as quickly as you can with as much size as you can in every equity market that you have. That is just, that's a next level of QE. That's obviously the massive outlier. Something that they could mention instead is that they're looking to buy corporate bonds. In which case, again, I wouldn't be as aggressive with my size, but you're still buying pretty much, Euro Stocks 50 DAX, you're going to be buying very aggressively. Equities are going to rally on this. On this kind of situation, if he does mention corporate bonds, I'd imagine, the core fixed income bonds would actually offer. They might blip up initially. We got a knee-jerk reaction up, but I'd be looking to sell into that because them looking to move more into the credit markets as opposed to the main core fixed income market. So we might see a bit of an offer on those bonds there. Right. I've given myself about a 20% risk allocation for that. Obviously, it all really depends on what comes out. If it's something massive, I'm gonna, ad hoc add myself a little bit more risk on that. I might give myself maybe a whole week's worth of risk if it's something as big as we're buying equities. I will buy all that I have in the equities really, if that actually comes out. But it's something to keep wary of. It's very unlikely, but prepare for these kind of outliers. We've already seen that they're looking to potentially act. Any point in time, they might start looking to actually give that notice to the market of what they're looking at. Wednesday, we've got German, European, UK PMI services. That's, again, final reading. So as I said before, not as big as the preliminary. European PPI, US ADP. Obviously a good precursor for the US NFP later on in the week. Then we've got the US non-manufacturing. And then we also have the Fed's Yellen speaking. So, again, keep in mind, ISM non-manufacturing, not one to be faded. Fed's Yellen, again, not one to be faded. So definitely keep very, very, keep your very close to the ground when it comes to Yellen. Just as Draghi, Yellen could indicate whether they're kind of have their mind a little bit more set on December. Obviously, we've seen a lot more aggressive pricing. I haven't looked at the curve as of recently. I think before the FOMC, so before pre-FOMC, we had a pricing for DEC 15 of about 35%. I think in the days after, we saw that go up to about between 40 and 45%. I think that's as high as 50% now. I'd have to double check that. Actually, you know what? If you want to bear with me for just 1 second, actually, I think I can get that up. So just bear with me for literally 10 seconds, and I can just actually pull up what that probability is. So yeah, for December, it seems we've currently pricing in close to 50%. We're actually pricing in 47% for December. So that's where we're currently standing. I remember seeing a stat somewhere that the Fed's never actually hiked without the market pricing in, without it being greater than or equal to 70%. So, that's something, interesting to know. Will the Fed actually try and slowly push the market if they're set on hiking December, instead of just hiking with the market expecting it 50% of the way? Are they going to try and slowly leak that up to 70 by, saying something, giving a little stronger rhetoric, saying that they're they want the market to be a bit more vigilant about this and price it a little bit more aggressively. Whatever the case may be, if Yellen says something that's strong and particularly hawkish, keep that in mind. We're already seeing a downtrend develop in some of the bond space here. We've seen the longer end, even the short end, very much offered, with the longer end following. So do keep in mind that's going to be really, really crucial in the weeks, this week ahead, especially. We've got the Fed's Fisher also, and Harker speaking on Wednesday. Again, 20% risk allocation for Wednesday. Looking over at Thursday, we've got the Bank of England Super Thursday again. So rates, minutes, and QIR. Keep in mind this is pretty big. We've seen some some fairly big moves with regards to central banks. Will the Bank of England now also have their say and try and price in a little bit more aggressive expectations for a rate hike? Just keep that in mind. It's all going to be really in the QIR. That's really where we're going to be looking at for that potential hint. Again, ECB's Draghi speaking on Thursday, and a load of Fed speakers as well. Again, very high risk allocation, again, because of the Super Thursday. I'm not going to go through the full analysis of this. I'll probably wait. I'll let either Brannigan or Imran or Alex Hayward, whoever's going to do this rundown, I'll let them cover that during the week. And then looking over to Friday, we've got the German industrial productions, UK industrial manufacturing production, and the very important US non-farm payrolls. Just as a backdrop, last non-farm payrolls, we got 144K. We're expecting usually around 200 or above. So we get another low print. We might start seeing a big reversal in some of these bonds, just because even though the Fed's pointed toward December, if we get a low print again, something in the region of this, 150, maybe even lower than that, that could be huge. We might see a huge reversal in the bonds to the upside, just because they might start pricing out of it, because we know that the Fed is data dependent. Conversely, if we get something way bigger, something in 250 range, something that really shows that the job market, that was just a blip in the data, we might start getting some really aggressive pricing again, and with a continuation in the downtrend. So good scenarios either way. Make sure you understand your market structure coming into this. Right. So let's look over at some of these market structures like we just mentioned. Going through specifically looking at the weekly. Why is that budged here? Just bear with me for a second. I'm getting a little bit of technical issue here. Okay, here we go. So looking over at the Bunds first and foremost, this is our weekly market profile. As you can see on the chart, we've seen the market actually false break this key region. In here, if we just push this a little bit here, there we go. We've seen this really key region in here for the Bunds. The market took that out last week, and then false broke, actually closing back below this really key region. Now, from a metric perspective and the level and area perspective, the value area is between 157.03 and 158.13. Now, from a scenario perspective, it's really important to understand how the market's going to react around these regions. Now, there's some good resistance up above. We've got 157.60, which is our VPOC for the week. We've got 157.73 all the way up to about 82s, which is a really nice little area. If I just actually split this up, toggle this. If I just split this up in here, you can actually see these areas that I'm talking about. Just erase some of this out. So this area here, 157.82s is that swing low in here. We've got, that was that previous high at 79. We've got around 70, I believe that's 78. So 78, 79, again, 50% of the week. Huge level. And 157.73, that was basically our inside day high, which we broke in here. So really key area here, really, really important area. Between 73s up to 82s is a very huge resistance zone that I'm going to be looking at personally. Now, the context of that matters, because if we rally from here and test this area, I'm going to be very keen to sell it. However, on the the contrary to that, if we open up, sell off initially, break this key weekly value area low here, and then break back above and move back into value, I'm going to be less keen. I still will look probably for a sell around this region. It will be more of a scalp though. I'm not really going to look to be aggressive to hold that potentially. If we get back into this region, I'm not going to be looking to get short here with an objective of making this move all the way back down. So it depends. Scenario one is we just rally back up into this region and you get off a good short. Essentially your risk, you don't really want to be even though the value area comes up into this region, effectively I'd say if you really want to take the proper trade, your stop is above here. So this whole region in here is where your stop is. But if you want to play a little bit more conservative, you'd say your stop is in here, just above that previous daily high. If you can't afford that big of a stop and you want to do a little bit more size and you don't want to take a look at these little swing regions in here, you could potentially put your stop just above here in that little region. But ultimately, you really shouldn't be getting back up to these regions, especially above the value area high of last week, if this is potentially going to be relatively bearish. That's scenario one. Scenario two is this: we false break to the downside, come back inside. I'm actually going to be looking to buy this around here. I'll probably be looking to buy in this region. If we scenario three, offer down, use this area as resistance, and then offer even lower, I'm going to be looking to be a seller around this region, and potentially looking for, I'd say, probably quite a decent move to the downside, because effectively at that rate we're going to be breaking back into this really key zone in here that we spent a lot of time in. So I think we could really see a move that's aggressively prices down, maybe even down to these 156.37s. Pretty nice little low volume area. There's a weekly value area low there, just there as well. So nice little area for me. But ultimately, if we're really bearish and if we really do break quite a bit lower, this is the massive area that we could not break time and time again. We came into this area, it was our absorption area before we rallied up in this week. We came back in this week here, we absorbed again, and then we rallied once more. 155.74s to about 83s is such a crucial. This was such a crucial absorption zone for the buyers. So I'm thinking, below this area, it could be quite vulnerable if we break it. If we break that and we're looking particularly bearish for whatever reason, I'd expect there to be some decent sized stops below this level, below these levels, and we'd see, maybe quite a quick precipitous move to the downside. And that's just from a structural perspective. That's what I'm expecting. If I don't see on the price ladder, of course, I'm not going to be that aggressive. But that's currently the structure in the market. The weekly high, 158.60 for the Bunds there. Quickly going to move over to the Euro stocks now, just to give you guys a little bit of structure on that. Very interesting structure again in this, and mind you, we've got the first of the month potential buy in here. The market is already, has already had a very aggressive move to the upside, and this week we mentioned last week our value area high, our weekly value area high was at 33.71s. We did not even get inside last week, the previous week's value area high. So that is already something that we're noticing that's very, very bullish. Obviously, having said that, if we can manage to break back inside here, anyone that's been aggressively long in this area is going to have to cover quite quickly. So that's obviously one scenario we can keep in mind. But I think the base case scenario is that the market is very much bullish. And we're seeing right now basically a very big flag. So this is potentially a massive flag formation. I'll keep in mind, obviously, because we've seen this very structured profile, you want to keep an eye on this 3405 VPOC for the week. Our value area high at 3418, value area low at 3390. Our close is just below that, I think, at 02s, so just below that VPOC. Keep an eye on this level. If we start building some structure here and break, hold that value area, we could see a very quick move to the upside. Having said that, you want to keep an eye on the daily structure because we have 2 inside days. So we won't be able to see that here, but if you look on the daily structure, we've got, just bear with me for a second. So we've got the first inside day right in here. This is our first inside day. Our high at 34.24, low at 33.86, and then our second inside day just in there with, just bear with me, the high at 34.39 and the low of that inside day, just bear with me for a second, is 33.82. So that is currently our structure in the Euro Stoxx. So there is a decent amount of coiling. Don't be fooled by the fact this has gone very quiet. This is potentially a massive coil, and if the market is giving me that indication that it's holding this VPOC, for example, breaks this inside day, can hold above the inside day, breaks this inside day, holds above that, this could potentially form into a very aggressive trend. So just bear that in mind. We've seen the initiative move into this area. It is the first of the month. This confluence on this could potentially turn into something decent. Now, on the contrary, we do expect buying on the first of the month. If that buying fails, what you normally see is whoever's bought very aggressively in the morning gets, has to puke very aggressively, if that trade does go wrong for them. So if, for example, we open up here in this range, we see very quick move to the upside. Let me just quickly erase that. We open up around here, we have very quick move to the upside as people start buying it. The cash comes in and a seller stops absorbing and stepping in. We might, often we get a very quick flush if that goes wrong. So that is one scenario. The first scenario, obviously, we just bid up. Scenario 2, we get that flush to the downside. We get that possibly that inside day break to the downside. I would still look for potentially any absorption here. If we get absorption, we get back above, false break that, then it's game on. In this area here, you want to be, pretty big buyer of this area, because you're not only going to get a good risk reward, you're going to have your risk here. You've got potentially at least the reward of this whole inside day in here. And if we break this, even if we break this region, there's probably lots more upside to that trade as well. So there's a lot of decent little scenarios. I'm not going to go through all of them, but there's a few that I'm looking at for this week in the Euro Stoxx. And like we just said in the Bunds, there's some good structure. If you can just see and picture it on a price chart, on a candlestick chart, this is what the flag looks like currently on the 60-minute Euro Stoxx. So this is what I'm going to be looking at very, very keenly to see how the price is reacting if and when we take out, which we will at one point take out either this to the downside or we potentially take it out to the upside. So do bear it in mind. The structure of the market currently coming into this is very much long. There is that structure, and we have seen the initiative move up. This is our flag. If we break, this is basically our target. Whatever this is, that we take that as a target, and we extend that to the upside. So yeah, that's basically what I'm looking at this week. Hopefully we have a decent, some decent volatility, some decent moves and price action that we can read. Good luck for the rest of the week. I'll be doing a price ladder analysis video on Tuesday and my weekly market wrap at the end of the week, as per usual on Friday. Stay tuned. If you have any questions, if you just want to interact with me or let me know anything, follow me. You can follow me at Twitter. My Twitter handle is at MVS_Futex Live. So give me a follow, throw me a couple of questions if you have anything, or if you just want to chat about anything in the market, feel free to, and we could take it from there. All right, good luck, guys, and take care. Bye-bye.